about, where the rich have got richer, the poor have got poorer. Mainly because, you had more people move into agriculture, which is basically a low-paying occupation at the bottom of the pyramid. You had people kind of benefiting, from the fiscal stimulus coming into the market. People benefiting from equity markets, people benefiting from services sector jobs like in IT and financial services post pandemic. So, the inequality is for real. But that said, I think we also need to highlight that before we strive for equitable distribution, we need to grow the pie. Only then you have something to actually distribute. So I feel the focus should remain on growth, but as the country develops, it should also focus on more equitable distribution of wealth.
All right. Equitable distribution of wealth, as Shweta rightly pointed out, has been a huge topic of conversation and debate, especially with regards to what we've been witnessing on our social media feeds. As Shweta was
5,000 crore rupees spent on a wedding where we don't even know what the poverty line is for the country.
Yep.
Should it be 32 rupees? Should it be 100 rupees? Well, that of course continues to be a point of conversation.
For now, we're going to take it back away from poverty into extreme wealth in this country, which is the stock markets. And the stock markets are set to open higher, is what we understand. Maybe I don't understand it all that well as to how to anticipate market open. We have Suyash Maheshwari, my colleague and friend, joining us here in the studio now. For that, Suyash, talk to us. What are the street murmurs at this stage? How are the markets likely to open on this budget day?
So Krishna, as per the trends on GIFT Nifty, it's expected to be a flattish sort of a start this time around. But I think, none of us are expecting an uneventful day by the time 3:30 comes around. But, looking at the overall setup, the situation is different this time around. Previously, if you look at historical trends, in 8 out of last 10 budgets in the run-up to the budget, in 1 month prior to the budget, the markets have actually corrected. But this is not the case this time around. In fact, Nifty has rallied close to 4% in the month prior to the budget. And since counting day, Nifty has gained a massive 16%. Small caps and mid caps are up about 20%. And that's just in a month and a half. So clearly, there is, exuberance about the budget. And there are a couple of factors that play over here. First, as you guys pointed out, that the budget is expected to be growth oriented. The schemes are the expectations are that welfare schemes and social spending will likely go up, which will facilitate rural demand and consumption. Also, there are expectations that certain measures will be taken to put more money in the hands of the middle class, and that would overall boost the savings of the middle class as well as rural India. Also, that will if they save more, they will invest more. So that will keep helping the markets moving forward. And if you look at the overall setup, in the 6 weeks prior to the budget, the markets have been running up constantly. They are on a 6-week gaining streak. Just last week we ended flat, but even in that correction, the large caps, they were able to end on a flattish note. We saw some bit of correction in the mid and the small caps, as well as, the so-called champion sectors like your railways, infra, defense. They corrected, and perhaps it could be fears of disinvestment. We know that SEBI's 25% minimum public shareholding deadline is just about the corner. So maybe government does focus on disinvestment going forward, or at least in this budget, we have some targets in that regard. Also, another factor why perhaps there could be some correction in these sectors, PSUs, railways and defense, could be because of overvaluation. Remember how aggressively these sectors have run up in the past 12-15 months. Some of these stocks are up 200 to 300%. So they have generated like 4x.
Incredible wealth creation, isn't it?
Yes, for sure.
Let's quickly get in Rohit Srivastava into this conversation, founder, market strategist, India Charts. Thank you very much for taking time out. One of the couple of words that we've been hearing now for last few days, especially since yesterday, is exuberance. Is there's too much volatility? Perhaps there is over financialization. And quickly quoting from what the economic survey said about Indian financial sector, it said that it's at a turnpike moment where dominance of banking support to credit is being reduced, role of capital markets is rising, and perhaps that is something to worry about. Are you worried about it?
So thanks for having me. And what I would really say on that is, it's not really a worry. I think it's a very welcome structural change. And for a second time, for those who don't remember, in India, that, in the 1980s, we wanted this movement towards equity to start. And it actually did with the introduction of mutual funds, the US 64 scheme, UTI. And why I actually recall those moments is sort of started tracking markets in the late around 1990 onwards. And that was a period where huge retail participation had actually started to happen in India. Now, this is the second coming and in a much, much bigger way. Why should it not be welcome? It is a very, very huge welcome change because participation in equity not only creates wealth, but also provides capital to the markets. The big difference, though, then is the regulatory environment. The regulatory environment there after the first round of reforms in 91 was excessively open, which resulted in multiple scandals and scams and so on and so forth, which then got us into a lot of trouble. So in that sense, I think all the noise that we are hearing is good noise because people are worried that the same kind of thing should not happen today, where retail investors get caught in something wrongly, and it doesn't turn out the way that you thought out, and then it takes several years to correct that. But like I said, the regulatory environment is so very different. SEBI is very, very proactive. Everybody's watching the data and thinking about how to get it right. So what can really the best outcome can be in this is where the government or its policies simply redirect this capital that is coming into markets into the right places. I think that is the ideal thing. A lot of chatter about tax increases and all doesn't really serve the purpose because that is dissuading investors. I think the only place I would be concerned, if at all, it would be around this weekly options area. That is something that.
All right, Rohit, we'll
Yeah.
come back to you shortly. We have visuals now of Finance Minister entering the Ministry of Finance on your screens right now. The person of the moment, she will be heading to Parliament right after this. But before that, she is currently now entering Ministry of Finance. Nirmala Sitharaman on your screens right now.
So back to the markets, Krishna, I just have one observation right now, and I think, Rohit and Amrish, when he joins us, both should be able to weigh in. I somehow feel right now, our institutions don't seem to be in sync with where they want consumer money to flow. At one point, we are talking about household savings being low. We are talking about banks perhaps needing more capitalization to be able to fund capex. We are talking about high interest rate and the logical assumption is that people should partake in the fixed deposit story, to shore up the lesser risk asset class. And at the same time, we have statements on F&O coming, which would at some point dissuade people from taking part in the financial markets. And the speculative tax on F&O, I think, is something which is of great concern, not just to retail investors, but even to institutional investors out there. So, Rohit, if I can just get your views on that, are we in sync with what we want people to do with their money? And even if we give more money in their hands, do we want that money to only compensate for inflation? Do we want that money to find its way into the banks? Or do we really want the bull run to continue?
So the goals of the investor are very, very different from, the institutional framework. The goal of an investor is one is to grow his wealth and second is to beat inflation. Those are two simple goals that we are really trying to achieve. But see, some of the things are contradictory.
Rohit, sorry to cut you short. There are live visuals on your screens right now. Finance Minister holding that Bahi Khata, this very important, crucial moment that we'll all be referring back to through the year, Krishna.
Absolutely. It has been made into a tradition, if I may. Once upon a time, it was a suitcase in India. That's what went inside the parliament. But now that's all changed. It's a finance minister presenting a record 7th budget, and the Bahi Khata continuing to be a symbol, if I may, of a prominent feature of our budget presentations. All I can think of is that
Just
little...
flogged by all the officials, people responsible really for coming up with not just the economic survey yesterday, people who are going to write the fate of this country for the year to come at least, flogged by all representatives from Ministry of Finance.
That little red, encasement has a lot of hopes.
A digital one, an iPad, a tablet. I don't know if it's a Make in India tablet, if it is something which has been produced, within the shores of India,
or Noida tablet.
Yeah, could Could be. I mean, you never know. Or made in Chennai for that matter, Krishna. It could be assembled by Foxconn for all we know.
Yeah. Could be in Noida, could be in Chennai. In fact, Tamil Nadu and UP, incidentally, are competing for the top honors as far as electronics manufacturing in this country is concerned.
And a Make in India car there, the Maruti Suzuki Ciaz, which is driving Finance Minister now to Parliament.
Talk about another Make it in India statement over there. Incredible. So we will be bringing you, as the adage goes, the ball-by-ball coverage of Budget 2024 right here. We have a very special set of guests joining us here in the studio. The latest to join our long panel of distinguished guests is none other than Mr. Lloyd Matthias, who joins us here in our studios. Thank you, Lloyd, for taking time out to be with us this morning, this day, Budget Day, special day for not just us in the studio and our guests joining us like Rohit, but to everybody watching. Budget Day, income tax, indirect tax, the burden of the taxes on India's middle class. If they were to by chance save some money and try to invest it in the markets, be it mutual funds, SIPs or stock markets, you pay tax on that if you earn anything on that as well. So this has been the talk of the social media, in the lead up to this budget. How many taxes will the middle class pay? And if I were to ask you, do you see any relief coming in for all those watching us right now?
Yeah, I think great to be on this show. I think fundamentally the middle class is looking forward to some relief. I think this is the one segment that's always got the raw end of the stick. You have the large farm lobbies that kind of ensure the farmers are well, and of course the people at the bottom of the pyramid represent a large vote bank. I think the middle class have kind of bailed out the country in a sense and have really got nothing in return. And I think this time around, I think the expectation is that they will certainly get some degree of tax relief. And here I'm talking of the salaried middle class, a lot of whom get tax deducted at source, the TDS, as some would call it. I think they've really gone through years of, just kind of paying taxes and not getting served in return, right? Whether by their political representatives or whether basic issues. You look at our cities, look at the quality of traffic, look at pollution. I think it's time to actually address this core constituents that have been fueling the economy. And I really believe there are some rationalizations on the personal tax structure that needs to come in. I think the one big startling point that I'm sure that the finance minister has recognized is that last year in direct taxes, personal income tax overtook corporate tax, right? So I think that's a big signal. So right now it's actually people's taxes that are in a sense made. So personal income tax overtook corporate tax. So I think it's something that really needs to be relooked at in this budget.
All right. Well, that of course would be one of the expectation from the budget.
I actually want to circle back to Rohit and what Karthik was saying about this speculative tax that is expected. There has been a change in wording. Both SEBI and the government has raised red flags about this unabated rise in retail participation in the F&O segment. But lately, in the wordings, I mean, speculative trading and derivatives trading has been used interchangeably, right? So, Rohit, do you expect a speculative tax for F&O, and could there be a 30% sort of a tax implication for the derivatives segment this time around, sir?
So I don't really think that would make much of a difference, and I'll tell you why. For those who don't remember, F&O trading gains and losses were considered as speculative tax, prior to, I don't remember the year exactly, but 2008 or 2011 when they changed the tax requirement from speculative to business income. Now that it has come under business income, to go back to speculative tax is simply making the tax law more complicated. Now think of it from a retail investor's point of view. How many people run businesses? So essentially this only helped people who were running a business, had losses in F&O. They could have probably written it off against their other income and reduced their tax outgo. Now when we know that most people tend to lose money in the F&O segment, when you introduce this for retail investors, all they're going to end up doing is carrying forward losses either as speculative or as business income, but they don't really run businesses. So by changing it from one to the other, apart from complicating tax law, you're not going to really achieve anything. So I don't think this should be done, or it has any meaningful output. The other, contradictory issue which you were asking earlier about interest rate and the banking sector, I think that's where a lot of contradictions are there. Say, for example, we want people to earn a higher rate of return, but you also want deposits in banking to go up. Right now, if you want that, you'll probably want a higher rate of interest in banking. But on the other hand, we need to lower interest rates with the trends globally. to make it easier to finance projects and improve the economic environment. So this is a contradictory force that you're going to be dealing with over here, because on the one hand you're going to try and pull down interest rates to make the investment environment more friendly, but as you do that, you are further going to deviate away money from the banking sector to other segments. So how do you handle this would have to be done through some incentivization of other, in some way that the government would have to really think about.
Right, Rohit, stay with us even as we're discussing the markets. We have a very special guest joining us, a market expert joining us. We have Ambarish Baliga. Mr. Ambarish Baliga, thank you so much for taking time out to be with us here on Budget Day here on News9 Live. Great to see you. We're in the thick of a debate on the taxes, the speculative tax on F&O, and all the chatter surrounding investments in stock markets being taxed. Would love to begin with your view on with your views on that as well.
See, my belief is possibly for speculative income, especially the futures and options side of the market, it's very much possible that there could be a tax, a higher tax to be a deterrent for so many people just trading day in and day out. So I think there can be some sort of a special tax as far as the speculative income is concerned. Whereas when it comes to long-term capital gains and short-term capital gains, I don't think there will be any change, but possibly there could be some simplification of these taxes. So overall, I think the taxes, imposed would be more to deter people from this unbridled speculation which is going on, and which has been a cause of worry as far as the regulators are concerned. So I think that would be addressed.
And as we speak, markets have opened on a slightly flattish but positive note. So, yes,
market have opened actually higher. The Nifty is up about 0.2% as we speak. It is above 24,550 levels. The mid cap and the small cap indices are doing better. Both indices are up about 0.5% or so. India VIX, for that matter, has in fact fallen by about 4.5%. It's below 15 mark. That's interesting to see, because typically you would expect volatility to go up. All other sectors are in fact trading in the green. So a good start to the day on budget day for the markets.
What do you think is going to happen from here? I think, during the budget speech and in the immediate aftermath is when that VIX is likely to move, I think, and it's likely to move up.
Ambarish, would be great to have your take on that. Where do you see the markets on budget day?
I think that's a $1 billion question. I also don't
many billions of dollars possibly.
All right.
But then yes, I would give you a regular answer. The markets are going to be volatile, no doubt. When on a day like a budget day. But then we should remember that the valuations are quite expensive. So unless it's extremely good budget from a market perspective, for the markets to hold up, I think it will be a bit difficult. So my bets would be more on the markets correcting post-budget. So I would go into this budget on a slightly lighter portfolio than fully invested.
All right. Actually, I have a question for both Ambarish and Rohit. Since the most of the positives, as you said, have been factored in and the markets have run up quite significantly ahead of the budget, do you see if there is any lack of announcements? Could there be a big crash like the one we saw on counting day? Rohit, you first.
So I don't think there's a case for a negative surprise like there was on election day. In fact, if we go by the derivative positioning, if I just reflect on how FIIs were positioned ahead of the election day, they had the highest short position in months near the bottom end of the range. They were also selling in the cash market. Today, the situation exactly the opposite. They're extremely long. It's a 7-year high in terms of long positioning by FIIs in the derivatives market. And they have been buying in the cash market, and this is the highest net buying for a month since December. So this is a 180 degrees opposite scenario. My sense, if I go by the positioning, would be that they are anticipating a positive outcome from the budget. We have both liquidity flows at the domestic and foreign level now positive. So liquidity itself doesn't really point to a downdraft in the markets, though all the concerns I think have been pretty much highlighted around valuations and so on. But my argument around that is that there are pockets of overvaluation only. It's not the market as a whole that is overvalued. It's not mid caps as a whole that are overvalued. There are only pockets of overvaluation. So there's a lot of room for rotation to happen. Now, sometimes rotation happens with a correction. Sometimes rotation can happen in an ongoing market as well. And last, 3 to 4 years, in fact, the post-COVID environment, we've actually seen rotation in an ongoing market. So that is why I wouldn't expect too much of a downdraft. In fact, I think the case is for a positive surprise.
All right, and sectors in this run-up, I mean, the markets have have been on a gaining streak for the last 6 weeks. But last week we saw major correction in some of these championship sectors. Your infra, defense-related stocks, they all saw profit booking. What do you think is the case? Overvaluation or fears of disinvestment? Amrish.
A mix of, yeah, sorry.
Disinvestment, possibly yes, but then I think it's a case more of overvaluation because, just talk of defense. I mean, about 3 or 4 years back, we were talking of P of about 8 to 10x. Today, we are talking of revenue 8 to 10x. So that really shows as to, the amount these stocks or this sector has moved. So it's quite natural that there has to be some correction before possibly the next move. And from a budget perspective, clearly, like I said, there may not be anything majorly negative as such overall in the budget. But then I think the only negative in case it comes could be the speculative income tax, which I was talking about. That could be negative from a market perspective. And in case that comes, that could be one of the reasons for the market to correct. The other sort of a reason could be that, at the level we are at right now, clearly, I think only a dream budget can actually sustain this rally further, which I clearly don't expect this time because it'll be more of a realistic budget than a dream budget. So possibly the markets can fall under its own weight. But again, I would say that it may not be a sort of a crash like what we saw on June 4th, but it could be a gradual correction.
Gradual correction, that is the expectation. One of the conversations, of course, we also want to have is the taxes that common man really pay, the retail investors pay on every time they trade in capital markets. Let's quickly listen in to this short explainer on the taxes you pay and the possible changes that can come in by the way of budget. Ever wondered how taxes impact your stock investments? Well, let's dive into essentials. First, there's STT or Securities Transaction Tax, a nominal fee applied to every stock transaction, typically around 0.1% of the transaction value. When you sell stocks within a year of purchase, you'll encounter STCG or short-term capital gains tax at a flat rate of 15%. On the flip side, if you hold stocks for over a year, you're looking at LTCG or long-term capital gains tax with a beneficial rate of 10% on gains exceeding 1 lakh rupees annually. STT plays a crucial role in market operations, while understanding STCGs and LTCGs help you strategize your investment for better tax efficiency.
And as we continue our day-long budget coverage, non-stop live coverage of Budget 2024, latest visuals on your screens of Finance Minister Nirmala Sitharaman with the Bahi Khata, that digital Bahi Khata, e-Bahi Khata if I may, which is possibly a tablet wrapped in red. Lots of hopes are riding on it, and we here at News9 Live are going to help you and everybody decode Budget 2024 with some special guests joining us all through the day. We have one new guest joining us now on the broadcast here in our studios. We have Mithali Nikore joining us from Mithali Nikore Associates. Thank you so much for taking time to be with us here on Budget Day. We were discussing markets right now. We're just trying to understand what does it mean for every budget has a lot of meaning for the common man and the taxes that the common man pays. And then as far as the middle class goes, everything from their income tax to the tax that they pay when they finally save some of that income and invest it. That tax burden is crushing them.
Absolutely, absolutely. And I think, this time there are a lot of different rumors floating around. There have been rumors of inflation-linked taxation, where some people are saying, okay, maybe we'll have a situation where our tax brackets could actually be linked to inflation the way they are done in the US. I think we're a few budgets away from that. But at least that, the idea is being bandied about. And then there are certain people who are also saying that, let's look at the GST rates and look at rationalization on that side, maybe if not on the direct side, but at least on the indirect tax side. I mean, can we look at maybe reducing the number of rates from 4 to 2? And that's a proposal that has been gaining a lot of traction in the industry circles, maybe not so much in the policy circles, but at least in the industry circles, it's a huge demand. So let's see what we have in store for us. My particular request is to also rationalize customs duties. We have a lot of customs duties on number of commodities, which makes it very difficult for traders, importers as well as exporters. And I think somewhere we have to look at simplification of customs duties and trade processes as well.
All right, that is as far as indirect taxes is concerned.
But Shweta, I want to come back on taxes on stock because there are a lot of talks about there could be perhaps uniformity when it comes to financial assets, regardless of their holding period or whether they are debt or mutual fund related. Now, Rohit, I'll come to you on this one because Ambrish does not expect too much tinkering as far as capital gain tax is concerned. What are your expectations, sir? Do you think that introduction of uniformity across different financial assets could be brought about, or the long term the exemption limit of 1 lakh on long term capital gains on stocks, could that be revised upwards?
So that's a limited thing that can happen. I mean, revising it from 1 lakh to 2 lakh for the bottom end of the investors who are just coming into the market. But I don't think on any of the major taxes there should be really any change. I would probably agree with Ambrish on that. LTCG and all don't really need to be touched. They're already at a good place. Should we tax other asset classes in a similar way? Each asset class is very, very different. I mean, realty is treated differently for a reason, or gold and silver treated differently for a reason. So I'm not sure whether a uniform tax code for all asset classes really makes sense.
All right, and since the last budget, the FM said that the path at least going forward is towards fiscal consolidation. But since then, we have got this 2.11 lakh crore mega bonanza from RBI. Another 2 lakh crore is expected from the inclusion in bond indices. Where does that money go? Does it go towards taming deficit, or will it go towards boosting consumption, which could perhaps boost stock markets as well? Ambrish.
I mean, the way I see it is possibly it would go more towards the capex side of it, which will finally lead to a boom in consumption. But at the same time, let me also touch upon another topic, which I think would be of importance as far as the budget is concerned. I think clearly employment generation would be the another focus area for this budget, because see, we clearly have the demographic dividend as far as India is concerned. However, I think we need to ensure that this youth is gainfully employed, as it's a double-edged sword. Because if gainfully employed, we'll have a consumption boom going ahead, and clearly we will be on the path of Viksit Bharat 2047, which we've been talking about. But if not, then I think it can become a social issue. So I think this is an important thing which I think the government would need to focus on.
If I were to bring that question to you, the taxation on investments, everything from an SIP to a mutual fund to an actual, stock buy. I mean, enough of it, isn't it? In that sense, but then, realistically speaking, they're not going away anywhere. But what are your expectations from budget 2024?
See, I'll first tell you what I would want from the budget 2024, although I feel that it won't happen in this particular budget, but whatever expectations I have might be dealt with when the direct tax code comes into picture. Now, there are few points which of course the government needs to look into. First is, of course, like we discussed, the uniformity in different asset classes like equity, real estate and other asset classes. in this, I would also like a change in the debt mutual fund taxation, where the indexation benefit has been taken away. I believe that many people are not investing in debt mutual funds now. So, because after 2023, because the indexation benefit is no longer available. The second is, like we discussed, F&O taxation. So, F&O taxation, whatever it is, I have no issues with it, but the point is the audit in case of F&O. So, the calculation of turnover in case of F&O and getting audit done, everything is very complicated. Although we have guidelines by our institute in terms of calculating the turnover in case of F&O, but more clarity from the budget or maybe direct tax code whenever it comes in is definitely required. Second is more clarity on the most misused section, which is the presumptive sections. So, that definitely is there. And in terms of capital gain tax, only one thing which I am expecting from this budget is higher limit for the 1 lakh exemption in case of equity. If anything at all happens in terms of market taxation, it will be increasing this limit, because I don't see any increase in the tax rate, which is already at just 10%, and getting away with it, I don't think so will be an option.
Now, Gauri, you said that you don't have a problem with taxing F&O as speculative tax, a possible introduction of a 30% tax. But don't you think that would bring in more volatility into the system, because a lot of these investors won't be able to hedge their positions, right?
See, correct me if I'm wrong, but the SEBI, I think, has mentioned that 9 out of 10 people incur losses in F&O. So, I believe that F&O is a very risky way to deal with the market. If you understand the market, you are good at it, definitely you should go for it. But people basically what they do is, and especially because of the various reels on Instagram, and now if we see political inclination also towards the market, I feel that more and more people are taking risks. So if we see that if somebody from somebody on a higher position is saying that the markets will go up, people tend to feel that in one day they will get rich, and they tend to put all of their hard-earned money in F&O, thinking that in a single day they will be richer. So I think it's very risky. So you can't control that, but if you will lower the tax, I think it will increase the F&O traders, and people will tend to invest more without knowledge. Okay. With knowledge, I believe it's fine, but without knowledge, it's very risky.
Okay, so higher tax will act
on the
perhaps
Instagram
as a deterrent
feed.
at least for those.
On the Instagram feed, Shweta, you get the poker ads, and you get the same stock market, and tips, as one after the other. I think people click on the wrong thing and do the wrong thing at the end.
Oh, absolutely. But let's taking this conversation a little bit away from markets to the economy right now. Yuvika Singhal from Quantico joining us on the show. Yuvika, thank you very much for taking time out. I want to first come to you about the GDP projection for financial year 25 from 6.5 to 7%, which is what the economic survey is expecting at the moment. A bit conservative, would you say?
Well, I think it's largely on the conservative side, because most of the market expectations, if you look at the estimates on the street, are closer to 7%. Even global agencies, IMF recently revised up India's GDP growth for FY25 to 7%. And RBI happens to be at the top end of this forecast spectrum at 7.2. So while when the CA did announce 6.5 to 7, it did seem a bit conservative, but I think they want to err on the side of caution and give a band rather than giving a point estimate and then going back, because they do not have the chance to go back and revise forecasts like we typically do, keeping in mind how high frequency indicators move in the economy. So I think a band does make sense, because it's a document which has a larger shelf life or a longer shelf life, and it would remain on as a benchmark as to what the CA said at the time of the announcement of the budget with us for a span of almost 8 months. So I think it does make sense. It might be conservative, but we have to look at it from the perspective that it's a one-time forecast, a band forecast, which works well for a longer time.
sometimes do these forecasts sound like, make sure you under-promise and over-deliver? Because like, look at what happened last year. 3 out of 4 quarters of last year, you had 8% plus GDP. Literally, there were no predictions or estimates in that range for last year. And this year again, let's think 6.5 to 7.
I think it works well for the
Anything
government.
about that is a bonus, isn't it?
I think it definitely works
actually,
well for the government.
but it's actually true for us as well. Analysts on the street, nobody had predicted an 8.2 last year, right? So we need not be extremely harsh for the government for being, under pessimistic and then over delivering. But none of the, market participants also saw an 8.2 coming. So at best, we were somewhere around 7.5, 7.8, even until the final number was released. So it did catch us by surprise, but we have to understand what drove that upside was largely the wedge between GVA and GDP, which was somewhat peculiar in last year and is unlikely to get repeated this year. So there are much more finer nuances at play, I should say.
All right. Finer nuances at play. But before I let Amrish go, Amrish, your expectation from the budget, I think that is what I'm going to leave you with. Your expectation from the budget, and what are the key sectors one should watch out for, at least the retail investors today and the days to come?
Like I said, I think it'll be a bit on the populist side with focus on rural and the farm economy. But however, I expect the finance minister to continue with the fiscal prudence which you have seen in the past so many years. I think the middle class clearly is expecting some tax stops, and rightly so, because they need more cash in hand. And as usual, I think we'll see increased allocation to defense, infrastructure, including railways. And like I said, there could be some further tax, just to dissuade speculation. I think if you're talking of sectors, I see because of this budget, we could, and especially because of the focus on rural and farm economy, we could see an increase in consumption. My sectors which I bet on would be FMCG from a budget perspective, and overall from a recovery perspective, I would look at IT, where we start seeing some green shoots.
Okay. Some green shoots in IT and a few sectors. I hope people watching are noting down this sort of like a portfolio check that Ambarish Baliga is giving us. Ambarish, always a pleasure.
Thank you very much for taking time out.
For taking time out to be with us. Always a pleasure having you on the show, and we hope to keep having you again and again as well. But for now, I guess we have to let you go. Thank you so much for joining us.
Krishna, just to take a cue from what Mr. Baliga was saying, we are seeing some green shoots of recovery in IT and FMCG as well. Remember, as he said, it is expected to be a populist budget. So spending on social schemes are expected to increase, which will prop up rural demand. So FMCG sector has done fairly well. But Yuvika, I want to come back on a question to you regarding the problem that both FM and banks have raised this time around, that the deposit growth that's been lacking. So what do you think could be measures to boost that? Could there be some tinkering as far as FD tenure is concerned? So tax-free FD currently has a lock-in period of about 5 years. Could that be reduced? What else could be done to boost deposit growth for banks?
So I think it's a topic from a macroeconomic perspective which has garnered a lot of attention. Also because Governor Das has been very vocal about it. So he's talked about the wedge between deposit growth and credit growth, and how the wedge is very natural in an economy, but it can't be an extremely large gap, which leads to systemic liquidity issues in the economy. So I think it does make sense when they talk about upping deposit growth. But I think from an economist's perspective, we also have to rationalize that there are structural behavioral changes that are taking place in the economy. There is a decisive shift away from bank deposits to possibly capital markets and other financial intermediaries. It could be mutual funds, it could be insurance products, pension products. So people are parking their savings in a very different way now than they used to do probably a decade or two ago. And that could be largely stemming from a much younger demographics, which could be more risk-taking in nature. But having said so, if there are behavioral changes that are taking place, it is probably the right time for the government and the policymakers to rethink their approach towards deposits. One, the wedge between deposit rate and credit rate definitely needs to correct. And secondly, that deposits happen to be a very large, chunky item as far as investable resources in the country are concerned. And banks who are intermediaries have to pass on these investable resources from the household to the productive sectors of the economy. economy, especially the private sector. So there are a couple of things that they can probably look at. FD is one route. So, you talked about the tenor, that could be one thing, but also when FD is, prematurely withdrawn, there are penalty charges that are levied on it, which could be done away with or decreased to some extent. Also, the interest income that people earn on their bank deposits are subject to taxation. So the banks are expected or needed to charge a TDA, a tax deducted at source, a TDS. Any kind of savings oriented interest incomes above 10,000 rupees on an annual basis has to be included in your taxable income. So all these measures which are currently in place, which probably did make sense a decade ago, probably have lost some relevance and have made deposits somewhat on a weaker footing when we compare it to returns that individuals get from other channels or sources of investment. So I think the time is probably right to create a more level playing field in favor of deposits, which could ultimately lead to more liquidity and surplus, which can be effectively utilized to pursue, private capex cycle, or to channelize towards productive sectors of the economy, which could amplify into better growth outcomes for the country.
All right, on a lighter note, for the longest time we've been hearing mutual funds sahi hai. Lloyd, about time we hear banking bhi bura nahi hai. Go back to FDs.
Absolutely.
Perhaps time to go back to FDs.
I would say two things, but just want to react to one of the points that Yuvika made. I think one other factor that's gaining ground is that ever since the government put in tax breaks for the corporates in 2019, I think the sense is two aspects. One is, the reduction in corporate tax kind of fueled this market euphoria over the last 4 or 5 years. The second is, through the course of the pandemic, a lot of young people got onto trading, right? Whether it's options or it's normal retail trading. Now, both these have done, two good things. One part, it's kind of resulted in this boom. But now there's a sense getting around elsewhere in the world that Indian stock markets aren't reflective of the economic reality on the ground. There seems to be a disparity. At one level, you're talking of tepid consumption, you're talking of job creation being a problem, you're talking of inequality. At the other end, the stock markets are just looking like up, up, up and up, right? So I think this disconnect is what, between economists, market experts, one is expecting this budget to kind of address this, right? Where is this going to, right? At one level, markets are going up, possibly driven by retail euphoria, possibly driven by performance of company performances after the tax breaks and corporate tax. That's really helped. But to what extent is this converting to real jobs on the ground? And therefore, my sense is a big expectation of this budget is going to be around, what about the MSME sector? Yes. I mean, the big bulwark of growing the economy and rising consumption is having the the MSME really get back on its feet. And they have seemed to have been completely ignored over the last few years. And I sense this is the time to make that course correction. It's time the government looks at this important aspect. The last election's a bit of a reality check. I think we really need to look at that aspect, and would love to have some.
Absolutely, Mithali, isn't that the case? MSMEs being the backbone of job creation in this country.
So absolutely. Expansion of middles land, which is one of the key, strategic areas, focus areas for the government if India were to usher into Amrit Kal anytime sooner.
Absolutely, absolutely. I mean, if we look at the Prime Minister's vision, right, and which is a very important guiding milestone for each of the budgets that we've seen over the last 10 years. This is actually my 10th budget. So I'm celebrating my 10th anniversary of analyzing budget.
Happy 10th anniversary of the budget.
But if we look at the data for the last 10 budgets, we can see that there is a clear focus on 4 key segments in pretty much every budget. We see that in the agrarian sector, we see that with the farm sector, we see that with farmers. We see it with MSME to some extent. I do agree that it's a very, it's a sector for which however much you do at this point, it's not enough. Because it's not only about job creators, right? Of course, MSMEs are amongst the largest job creators in the country, but they have also lost jobs. Because if we look at the new data that's come in from the annual survey of unincorporated enterprises, which has come out just now for 23-24, Actually, MSMEs have lost almost 50 lakh jobs in the last 6-7 years, and this is something which is acknowledged and in fact commented on in the economic survey, where it is being noted that there is an increasing formalization of job creation, which is good, but at the same time, are we not supporting the non-farm sector enough, which is why we need the target, as was set by the finance minister yesterday, of creating 78.5 lakh jobs every year in non-farm unincorporated enterprises. How do we do that? By supporting MSMEs. And if we need to support MSMEs, not only do we need to support agro-processing and agriculture, because that feeds into MSME, but also infrastructure, because MSMEs are the biggest beneficiaries of logistics infrastructure, of energy infrastructure.
Absolutely. We'll come back to you on MSMEs, with visuals on your screens right now from Rashtrapati Bhavan, where President Draupadi Murmu can be seen speaking to Finance Minister Nirmala Sitharaman, who is all set to present her 7th budget, 7th consecutive, one of the longest running finance ministers of the country, Krishna.
Absolutely. A record 7th budget for Finance Minister Nirmala Sitharaman, the first for the NDA 3.0 government. We're counting down to the big moment when the budget speech of the Finance Minister will begin, and we here at News9 Live are bringing you ball by ball coverage of Budget Day, of Budget 2024, all day here on News9 Live. So make sure you stay with us. Some in-depth, incisive analysis with some...
And I believe that's the new Parliament building, where Finance Minister is expected at about 11 o'clock.
Yeah.
And I think some of the crucial documents which are currently being moved into the Parliament. On your screens, of course, is Nirmala Sitharaman, the person, the lady of the moment. She will, of course, be decisive in where the country heads in the year to come. We do have some reactions. We'll get to them very, very swiftly, quickly, in just a matter of minutes. But Yuvika, getting back on the conversation of economy. Now, India has a very, a robust fiscal deficit, fiscal consolidation path, a glide path. Current fiscal year, fiscal deficit is expected to be about 5.1%, going into 4.5% in financial year 26. But there is enough, headroom for the government this time around to perhaps either narrow the fiscal deficit by the way of that 2 lakh crore rupees RBI bonanza, the dividend bonanza that has come in. Where do you expect the government will actually put that money?
So I think this year the government has been somewhat lucky that their revenue constraints have been eased considerably, as you said, through the dividend bonanza that they have got from RBI. And probably we are this year, for a change, looking at a problem of plenty as to how to put to use effectively the resources that the government has. And while there could be, a range of possibilities, and people have been talking about probably the budget going all out, being more populist, which could lead to a higher allocation to revenue expenditure. There is also a possibility that they could use some of the money to reduce the fiscal deficit, up the capex expenditure target, and so on and so forth. But I think what the government should ideally be doing is that we have to understand that this bonanza that they have received is a one-time, and it is in their best interest to use it most effectively. And how we think that they will deploy it is probably meet multiple objectives. One, we should see some, revision up in the revenue expenditure targets. Some bit of upside both in the subsidy outgoes, both from food as well as fuel. They could also ensure higher outlays to schemes which are largely rural oriented in nature. So schemes like Pradhan Mantri Awas Yojana, PM Kisan scheme, maybe Manrega if they feel the need to up it at this point in time. And along with this, we could also see some top up in the capital expenditure vis-a-vis the interim budget targets. Why I use the word top up? Because we do not believe that the government will go, extremely gung-ho on upping the capex target. Because remember, any timeline for implementation of capex projects for this fiscal year stands shortened to about 8 months. So in any case, we have seen, and we have data for the months of April and May, that capex expenditure was actually in contraction, largely because the model code of conduct was in place ahead of the election. So whatever capex upside they would want to do would only be a token measure Probably take it close to a 20% annualized growth, but it wouldn't be too high a number, which doesn't look achievable in a year which has only 8 months to go. And finally, coming to the fiscal deficit, I think they'll use some bit of resources to lower the fiscal deficit from 5.1 that they had announced in the interim budget to 4.9. Right. So if you remember, in the interim budget, they were looking at a fiscal consolidation of 70 bips from 5.8 to 5.1. I think they would want to retain that band of 70 bips of correction, given that FY24 did close in terms of fiscal deficit better at 5.6.
All right, so no change in 5.1, at least that's the message that is coming in.
You want
right
to add something
I just
to
want
that?
to react to one point. I think, this big 210,000 crore bonanza, I think the budget is always a balance of economic and political reality.
Always.
I sense one of the big claimants out there, and therefore there will be some degree besides all that you said, would be this little balancing between Andhra Pradesh and Bihar. Right? The government is dependent, and there have been huge demands. Both these states have demanded for the moon. I sense this bonanza kind of helps the finance minister kind of answer that question. To my mind, that would also be a factor in play.
Absolutely.
And,
if there is no economics without politics, Krishna.
If there is no special category status, then that's some money at least, isn't it, Mitali?
So, in fact, this question, sir, of Andhra Pradesh and Bihar, for the last 1 week, all budget shows that I've been doing, it's been coming up. And I have a contrarian view. I don't think that there are going to be there's definitely going to be no special status, that I foresee. In terms of packages also, I believe it will be dovetailed into sectoral packages. So, for example, when we look at Bihar, most of the economic, contribution in GSDP comes from agriculture. So you'll say, and same with Andhra Pradesh. So you'll say, okay, let's have a massive package this year to focus on agriculture, and then look at some of these states and crops, etc., which are, more beneficial for
crops
these,
which are pertinent to some of these states.
All right.
But Mitali, I have a question for you. I mean, running a fiscal deficit in the short term is not necessarily bad, right? Especially if the money is going towards, sectors such as the focus is if it's on boosting employment or towards rural economy, right?
Absolutely. So as a classic economic question, this is exactly a question of Keynesian economics at one side, when you look at it, versus, more capitalist forms and, less government or more government. It's a very classic economics conundrum. And I feel like, today we're at that point where we can have an argument for more government, for social good, but less government, as, the economics survey has said, let go. Because there are a few sectors where we can say, okay, yes, the government can move towards disinvestment, privatization, but at the same time, some sectors where that government support is required, such as agricultural infrastructure, irrigation infrastructure, climate resilient infrastructure. I mean, this is something we don't talk about enough, and I love that the economic survey has a massive chapter now on climate risks to the Indian economy. And this is the first time that the economic survey has done that. And this is what we need to talk about more, that how can we have, for example, high yielding seeds that are drought prone. That's where I feel like it's worth running that fiscal deficit. So therefore, these kind of trade-offs is what we have to look at, how the budget will really balance.
Okay, and what kind of trade-offs? Let me get Yuvika back into this conversation. Yuvika, agri pain points, of course, remains a focal point for the government. And as Mitali was pointing out, for the very first time, we're also trying to budget in what adverse impact of climate can do to the economy. What kind of trade-offs do you think we can expect this time around? If government were to run a fiscal deficit, the chances of which are highly unlikely, what sort of trade-offs, what would be the key areas to focus on?
So I think one thing we have to be absolutely clear that when we talk about fiscal deficit, there has to be an optimum level of fiscal deficit, which is, from a macro perspective, acceptable. Now, if you look at the fiscal deficit target, 5.6 for last year, wherever the number comes this year, whether it's a 4.95 or 5.1, it still is a fiscal deficit number, which is way higher than where India was in the pre-pandemic years. And while the government has been fiscally prudent, and I'll give full marks to the government on that over the course of the last 3 or 4 years, but there is still scope further to crunch the fiscal deficit number and bring it to and align it to 4.5 in FY26, but also lay down a roadmap for fiscal consolidation beyond 4.5 after FY26. So the point that I'm trying to make here is that they need to continue on the path of fiscal consolidation. Now that is definitely going to be challenging because they will have to, this year they enjoy the fiscal bonanza from RBI dividend, which may or may not
stay with
be
us.
the case next year.
Yuvika, sorry to cut you short. Stay with us. We have shots coming in live from outside the new Parliament building. Finance Minister Nirmala Sitharaman there with the Bahi Khata in her hand, heading to present that budget 2024. Krishna.
Right. We are getting closer and closer, aren't we? From Ministry of Finance now. The Bahi Khata has moved to the Parliament building, the new Parliament building, where a new budget for a brand new government, albeit the same government we've had over the last decade, this time in a different scenario, presenting that budget. Lots of talk on, what was it going to be like for this government to present a budget with the kind of opposition numbers that are there in the Lok Sabha, which wasn't witnessed before, and the fact that they have at least two big coalition partners on their mind, weighing on their mind as they present this budget. But all said and done, the finance minister remains the same. It's the 7th budget with this finance minister, and also is the budget going to be the first one for the Modi 3.0 / NDA 3.0 government. The latest visuals coming in of Nirmala Sitharaman at the new Parliament.
And before we start getting in some critical voices, I think there are a number of issues on which the government has been cornered. One, of course, has been jobs, which we talked about, agri-rural distress. The other has been with respect to debt. And let me also get in Mithali into this conversation. Mithali, the external debt has been sustainable. That is what the economic survey is pointing out, standing at about 18.7% at the end of March 2047. So that's not a concern. What is actually concerning is the domestic household debt, which reached an all-time high at about 39% for the third quarter of 2024. Household debt is high, financialization of savings is low. Where does one head from here?
And household savings are at an all-time low.
Yeah, absolutely. I think this is where we need some innovative policy making in the actual personal finance space. Because when we think about it, yesterday, for example, I met someone and said, what is the most expensive asset I own is my house. But I'm not able to capitalize my house. I'm not able to get a reverse mortgage on my house in this country. And also the kind of personal finance instruments that are currently available are very much linked and focused on consumption. They're not focused on insurance and savings. And insurance-based personal finance products are a major need of the hour, also from the point of view of social security. So when we look at social security, we expect our jobs to give us leaves, we expect our jobs to give us maternity benefits, we expect our jobs to give us parental benefits. But we need to move into a system in the future where social security and employment may not be linked. And they should actually be a market for social security. So when we invest in personal finance products that are more innovative, we can actually deal with, this issue of high domestic indebtedness.
All right. Gaurang Shah is also joining us on the show. Before we go to Gaurang, a quick check on the markets. Let's get Suyash back into the conversation.
So Shweta, the markets, as you said, opened in the green, but they are now in fact in the red. In fact, very close to the lowest point of the day. Nifty, as we speak, is down about 0.13%. It's below 24,500 levels now. Nifty Bank has also corrected. Across the board, we are seeing selling in sectors, but two sectors which are defensive. FMCG, Pharma, they are faring better in fact compared to other sectors. Gaurang, considering that these sectors, actually I'll include IT in that as well, considering that these sectors have not done much for the investors over the past 12-15 months, is it the right time to invest in FMCG, IT stocks?
Thank you very much, Suyash. Morning to all of you all. So I think if I have to reflect upon the numbers of the IT sector, then definitely, barring Wipro, of course, all others have done well than what the expectation was. For the FMCG pack, last year, as we all know, there was erratic monsoon. This time, the start was a little bit dry, but July has seen a catch-up. Possibly the rest of July and the month of August could also throw in some kind of positivities with rain gods doing what they have to do. And as we all know, that large part of our population is associated with activity in semi-urban and rural India. I think today, if the Honorable Finance Minister has to do some more policy changes with agri-related sectors, then I think it will throw up much more positivity. So, I mean, timing is always very difficult, Suyash. But if you ask me from a long-term point of view, then I think definitely these two sectors must be looked upon as investment idea.
Okay, Gaurang, the only question I have at this stage is what explains the nervousness in the markets this morning? Starting with the positive, then getting into negative territory. We are already anticipating a volatile day's trading session. But if I were to ask you what exactly, how do you read the initial reactions of the market even before the budget speech is presented?
This always happens every year, honestly, before the budget and just, on the day of the budget. So it's not surprising. I think we need clarity, and I guess post clarity, you will have some kind of stability come in. And my take on the budget is that if the Honorable Finance Minister just keeps the ball rolling without doing much changes here and there, then I think we should possibly be quite steady to go into the future. The only thing is give growth a push, give consumption a push, create opportunities for employment, and look at agri sector and food security. I think that's going to be the pointers that I'll watch out for. I don't want to go into taxes, direct, indirect, or maybe personal or market related. I think we should leave it to the wisdom of the Honorable Finance Minister to do whatever.
Oh well, Gaurang, we can't leave it up to all to that. I mean, let's face it. Like most people watching this broadcast, including those latest visuals of Finance President Nirmala Sitharaman approaching the new Parliament building with the Bahi Khata in her hand. Come on, we have to have some sense of hope and faith that this budget will deliver when it comes to the income tax front, when it comes to the burden of taxes on the middle class. How can we, of course, we have no choice but to leave it up to the wisdom of the government and the finance minister. But we have to continue discussing that, isn't it, Karthik?
Yeah, so, Krishna, very interestingly, I was reading yesterday, the Niti Aayog had come out with a two-phase sort of description of the economic survey. And Niti Aayog Vice Chairman said that it's a balanced and sober economic survey. Yeah. I don't want the budget to be balanced and sober. Honestly, I want the budget to have a lot of imbalances. It needs to tilt in favor of manufacturing. It needs to tilt in favor of job creation. I know I keep coming back to that, but I think that is absolutely relevant right now to drive India's consumption story. Honestly, we cannot and we should not, in the interest of fiscal prudence for this country, be dependent on the government doing all the heavy lifting when it comes to growth, even with the economic survey pointing to a 6.5 to 7% growth, lower than 8.2% that we achieved in the year gone by. I really want the budget to tilt in favor of exuberance and in favor of pushing investments that lead to jobs. I don't want a budget which is balanced and sober.
Right, but, so clearly, you're saying not a sober budget, ideally something that tilts, and so little tipsy or buzzing.
I'll tell you,
tipsy or buzzing budget.
I keep coming back to the traditional, formula, and I think Mithali would be able to either agree or correct me. But I think the traditional definition of GDP growth, is Y is equal to C plus G plus I plus X minus M. Right. If the consumption story needs to pick up, you need to give more money in the hands of people.
Absolutely.
If you want private sector investments, the I component to pick up, you've got to ensure that your policy framework is conducive for the private sector to unleash their animal spirits. And you've got to make your exports and your net exports outshine your net imports. And these three put together should more than compensate for the G. I know Mithali was talking about more government in certain sectors. Yeah, but I want less government in the glide path to GDP, creation and GDP fulfillment. We need the private sector and we need the consumption story to fire.
Yeah. All right, and some would say consumption story is already firing. We also discussed how household debt is rising. And if I don't know if Yuvika is still with us, but Yuvika, you and I had this conversation about All right, Yuvika is not with us, but Mithali, you know, we discussed this about 6 months ago as to how household debt is also at an all-time high, and we were discussing that. It essentially goes on to the point of that people are consuming or be taking loan to consume what they're consuming and not
From a
have
mobile
enough,
phone to a vacation.
and not have any money.
All taken on loan.
Not have enough money in their hands. While it talks to the aspirational class that India has, the growing and ballooning aspirational class, it also talks about how little to no money perhaps in their hands to actually be able to meet some of those expenses with the money they have.
Absolutely.
And that is a concern as well.
Absolutely, that is a concern, and I totally agree with you that what we need to see is more government in certain sectors and less government in many of the productive manufacturing sectors, where what we need the government to do is set a level playing field for attracting private investment, for attracting foreign direct investment, for attracting foreign institutional investors to come and invest in India for the long term. And I think the production linked incentive scheme has been one of those game-changing, sort of announcements and measures. And I don't think the production linked incentive scheme could have worked had it not been for COVID.
Okay.
Because, at the time when it was announced, it was such a dire economic situation that a lot of international organizations also, in a sense agreed that yes, you need to bring in, foreign investment, and you have to bring in this kind of a PLI scheme to, attract them, because we're in the midst of COVID. And I think now that, we are post-COVID in a scenario, we can see it's starting to work.
But I think even the PLI schemes need certain revisions,
Yeah,
and I'm hoping
exactly.
that this would be the budget where we do
So
it.
Lloyd, would you give us a report card of PLI? Has it really worked? Of the 14 key sectors, and of course industry is demanding that PLI be expanded and further rationalized. Look at the number of sectors it's actually picked up in: pharmaceutical, auto, electronics, and some other ancillary sectors. It hasn't really picked up in all 14 sectors. But then we were talking to some of the government officials last time around. They said we have nothing to lose if the companies which are setting shop in India don't really meet those targets. Nothing's really coming out of our pockets.
I would say that the PLI is a bit of a long-term play, right? A lot of what the government did was really capitalizing on the fact that post the pandemic or during the pandemic, a lot of companies looked at a China plus one policy. So India saw an opportunity and therefore put in some of the seeds which might have a long-term play. When you're talking of certain high-tech sectors, a long-term play. To my mind, and to the point Mithali was making, I think this budget ought to course correct to some extent. PLI in large manufacturing is good, it's long-term competitive advantage, but it's not generally a job creator to spurt growth. I think where we need is a bit of the mid-market, more low-tech PLI, so to speak, when it comes to things like food processing, when it comes to things like apparels, ready-mades, footwear, which are slightly more employee generative, right? And I think that's the area that hasn't been looked at at all, right? So one, high-tech is important. It'll have a long-term germination. It will possibly make India more competitive. But I think we also need to spur the manufacturing sector that's somewhere in the middle of the market.
Okay.
I think that's where India seems to have lost ground, right? In textiles and ready-mades, Bangladesh has made strides, Sri Lanka is ahead. I think some of that correction has to happen. Food processing, footwear, lots of opportunities, more manpower intensive, and those sectors have been ignored, and India has lost its competitive position.
But strangely, we have, we are making boots for the Russian army. We're making cricket bats for the world. We're making bicycles for the world. Unexpected sectors where India is doing really well, isn't it, Mithali?
So, I mean, if you look at Meerut, right? If you go to Meerut, that is like our entire sports goods industry of basically 60% of world's manufacturing of cricket bats happens in Meerut. So, I'm not surprised that we are making the cricket bats in Meerut, or the boots in some other one district, one product sector in another state.
Yeah.
But I just want to mention some of the data that's coming from the economic survey on the impact of the PLI scheme. They say that 1.2 lakh crores in investment as of May 2024 has been raised, not committed, but actually realized because of the PLI scheme. And 8.5 lakh jobs have been created, direct and indirect. So it may be direct manufacturing jobs, but it also might be indirect jobs, created in the economy because of entrepreneurship, then creating a further downstream of jobs. So, and of course, the sectors that they point out, which have done really well, smartphones, electronics, automobile and auto parts. These are the outstanding sectors. Now, I think this is interesting because auto parts were growing even without the PLI, especially in the south. We saw massive clusters coming up in Tamil Nadu, for auto parts exports as well, which were happening through the, Southeast Asia route. But now we're starting to see the auto parts sectors come up even in UP and, northern states. And that's a very interesting impact of the PLI scheme. Of course, the massive Samsung investment that happened in Delhi NCR, literally close to where we are, happened because of the PLI scheme. So I do completely agree with Sir where he says that, we need to now take this and rationalize it to some of the other sectors. Also, we need to see sunset clauses, right? Because if they are only coming because of concessions, then we are not realizing our basic structural manufacturing strength. So we need to see that, now starting to come in.
All right.
So, Shweta, I just want to add to that. I completely agree, with what Mithali is saying and what Lloyd was also mentioning. But, I think like India has done with the semiconductor policy, India's semiconductor mission, it is outside of the PLI. PLI has an allocation of 1.97 lakh crore rupees, but semiconductors is outside of the PLI with another thrust of 87,000 crore rupees. Perhaps India needs to understand which are the top priority sectors and have specific policies for those sectors, and the rest of the expanded list of sectors that should create employment should fall under the purview of PLI. So, for example, smartphone manufacturing could have a completely different tariff regime, could have completely different targets of investment and job creation, and that should be one sector India picks up on, like you're trying to do with semiconductors, picks up on and says that, this is a sector where we are very sure we're going to beat China, we're going to beat Vietnam, we're going to beat, let's say, non-smartphone electronic production, laptop production, we're going to beat even Thailand, Philippines, etc., and focus on this as one of the sunrise sectors that we really want to put all our energies in, and incentivize job creation, investments coming into the country, also in the context of the various FDAs that we're talking about, the one with Switzerland, for example, the one in the making with UK. Like if you talk about the Swiss-India FTA, you're looking at about $100 billion of investment coming in. Which sectors? It has its expertise in watches and chocolates and dairy products, but trust me, all of those are going to take a long time to materialize here in India, even though we have inherent success stories like Amul and Amul going out of India to new markets, including US. But broadly speaking, I think we've got to understand which are the jobs that we want to create with a very, very clear priority focus, and which are the jobs that we want to incentivize and see how they spring up over a period of time.
All right.
Right, Srinath,
moving a little bit away from manufacturing, because that's not the only job creator. Let's talk about services. Services, Srinath, account for about 55% of India's total GDP. Services is an important sector, growing year on year, albeit last time around due to global environment, the economic environment, which hasn't been really favorable or conducive. Services has taken a beating, still continues to expand at about 7.6% annually. And can be a great job creator. Alluding to what our former RBI Governor Raghuram Rajan also speaks about, and a lot for that matter, is that it looks like we're a little bit slow when it comes to manufacturing, but we do have an advantage when it comes to services, and perhaps there needs to be more thrust in services.
I mean, Shweta, I think you're alluding to his latest book, and I think some of the statistics is shown around manufacturing and why we may not have the competitive edge are true. And alluding to services, one of the grounds that I have about our services is that we have not risen up the value chain. Let's take for example of the IT sector. I think I would qualify what we are. We are still cyber coolies to the world. We are low on the value chain. That's why our average hourly billing for our entire ITS sector is low compared to other consulting companies. We are taking great pride in saying that we are setting up GCCs. But end of the day, for our services sector to have higher premium or value per human being is only if we can create intellectual property. The good thing is in the last 3-4 years, the patent office in India has been a little active, I think, thanks to the government nudge in creating IPs. But how do we create more IPs? Look, let's say we go back to the STEM ecosystem, the engineering aspect. Our IP creation in the entire STEM ecosystem is very, very low, which means that for the next 20 years, we are still going to be dependent on the Western companies in providing solutions to us. And when we say we take great pride in being in a consumption economy, it's actually being a little ridiculous because we are paying out money because we don't have intellectual heft. So coming back to services, how do we create more jobs, or how do we create more qualitative and competitive jobs is only when we can move up the value chain and across space. Talk about consulting, talk about IT, talk about tech, talk about pharma. Everywhere, if we are in the lower consumption space or the lower value space, we will stagnate. Very similar as an example. 20 years ago, we were leaders in BPO and KPO. Today, in the last 10 years, we kind of lost that competitive edge purely because of, I think, labor, talent, or talent pricing arbitrage and forex arbitrage. Other countries, Indonesia, for example, English-speaking talent available at cheaper prices than Indian talent. Suddenly, the BPOs have started moving there for the last few years. So I think it's a zero-sum geopolitical game. If we want to move up in the value chain in the services economy, we will have to be paranoid. I mean, I would want to be paranoid for the simple fact that we have about few million students passing out of our tertiary education system every year. There are no jobs. If we have to move them the value chain, what do we do?
All right, Gaurang, I have a question for you. I mean, we are all talking about hoping for actually a populist budget, sweeping reforms, expanding the PLI scheme, providing a push for manufacturing and services. Let's say it's a complete dud, the budget. It's a complete no event. What happens to the market?
Doomsday scenario.
That the market has rallied quite significantly.
Not too very optimistic of
Just
you.
to play the devil's advocate.
Markets have risen after the budget. Maybe we might possibly sulk for some time. But then we'll get back to our working tables with respect to where the GDP is, what the interest rates are, what the earnings are, so on and so forth. And there have been times in the past where budgets have disappointed, but the fact of the matter is, even after that disappointment, we've made an all-time new high. So we have to look at life beyond budget. Budget is a platform wherein growth and direction is possibly made visible to all of us. And this is not the first and the last budget. We'll have many more coming through. So we'll have to live through the volatility. And I hope your statement doesn't come true.
Gaurang, if I can take you back to the conversation we were having with Srina just a few minutes back. On the IT sector, now that we've seen that the results have been better than expected for most companies barring Wipro, IT sector in the context of creating jobs still has two big variables. Number one is interest rates in the US, and number two is this influx of artificial intelligence, which many fear is going to take away jobs. So let's say the medium
estimate to that, about 0.2% to 0.3% of the jobs, which is what the economic survey is saying, could be taken away.
Absolutely.
Owing to AI.
Absolutely. So, I think broadly speaking, medium term, let's say, the next 3 years to a longer term view on IT, how do you think IT sector is really going to gear up with, what is in store for it with all these variables which are outside of its own control?
Okay. I think there needs to be a framework, both locally and globally, because if you use it in the right way, it's a blessing. If you do it on the wrong way, then it's going to be a curse. And we've seen some instances which has led to some kind of turmoil. So I hope there is a framework, and possibly the Honorable Finance Minister could possibly touch upon it today. With respect to the growth of IT sector, well, we at Geojit believed for the last 2 years, when the entire market was a little bit low or negative on the IT sector, we believe that growth will come through. It will take time. What numbers we've seen so far, I think the growth is likely to come back in post second quarter. So there is a silver lining. Challenges with respect to headcounts, well, the attrition rate has come down for some companies in the first quarter numbers this financial year. And there has been addition of employees as well. As far as the US and European markets are concerned, I think now that you have the history behind us in terms of budgetary cuts and discretionary spends getting limited, you should see some kind of revival from there. But it's not going to happen immediately. I think second half this financial year could throw in more light on the growth.
All right, Gaurang Shah there helping us understand. Karthik, at this stage, the one question that a lot of people watching this broadcast will be having is that what am I supposed to do with my portfolio? Gaurav, right now, we have what, 40 minutes left for the budget speech. What do I do now?
Well, you keep your shopping list ready, and if what Suyash has said comes true, then you will have great opportunity to buy. And if you're not really worried about next couple of hours or the next couple of days, stay put with your portfolio, and as and when you get opportunity, dip into some good, strong fundamental stocks.
Assuming I want to make the purchase fast, what should be on my cart?
Sorry?
Assuming I want to make the purchase really fast once budget speech ends, for me, I want to keep it ready. Like in Amazon, you once the discount is there, you put it in your cart and keep it ready.
Wants to make quick
what should be in my cart already? If not, over the next 40 minutes.
I'll jot down 5 sectors, okay, to restrict the shopping list. So it's going to be defense, it's going to be power, infra, railway related, banking and finance. I think that's going to be my top.
I will add one more if I could take the leeway, Krishna. I think green energy, green transition. So in power, I think my narrow focus would be on green energy this time around.
We're not naming the stocks, but we're telling you everything else, isn't it, Suyash?
Definitely. And look at how the sectors have reacted. We were just talking about this massive run-up that the markets have seen. But last week, your sectors, again, the champion sectors, infrastructure, defense, railway-related stocks, they saw some profit booking. So perhaps there is some, value like availability over there, and you could make fresh entries over there.
Right, fresh entries over there is a possibility, provided that correction that you're talking about post-budget really happens. There's a lot of supposition that's happening at this stage. We'll have to wait for time to pass. But if I were to bring the question back to Lloyd, talk to us. The fact of the matter is that we're sitting here in this studio with all of you in attendance on one day because this means so much to the common man. This means so much to the salaried middle class. This means so much to the middle class, which has taken to the gig economy over the course of the pandemic and before and after. So in that sense, and all of them.
And since we are on the middle class, Krishna, let me take it away from you here. I want to specifically talk about. We've talked about infrastructure, but within infrastructure, one of the key areas of focus has been around housing. Now, Pradhan Mantri Awas Yojana has completed its 1 year, and the target, 85% of the target has been met by June of 2024. Are we looking at more allocation, given that affordable housing has been on a decline? Both the volume and the availability has been on a decline. Now, for the benefit of those who don't understand affordable housing, we know that any housing below 50 or 45 lakh rupees is categorized as affordable housing. A lot of people, of course, want the roof over their head. And Srinath, at this point, do you think it's a cause of concern that we do not have enough availability of affordable housing? Perhaps a need for tax break for those who are building affordable housing, and for the common man as well, some sort of tax incentive for those opting for affordable housing?
I mean, the direct answer, Shweta, is yes. I think some form of direct subsidy on the taxes for affordability, or let's say the interest component of housing finance would be useful. And it is the past trends have shown that it has spurred growth in the housing finance or the housing sector. That's one. Two, I think we'll have to go look back at the structural aspect of the consumption economy, right? There is an aspiration for wanting more and better, even in terms of housing. So if you look at, let's say, the top 10 cities, the outskirts of the top 10 cities, the pricing has moved up in the last 5 years. So are we looking at redefinition of affordable housing? Probably we need to look at that, one. And two, I think structurally, are we saying that the aspirations of Indians for better quality housing is improving? Hence, we'll have to relook at the housing classification. Probably yes. And I just want to give an analogy here. Until very recently, in the definition of the housing regulator, Vashi, a suburb in India, outskirts of Mumbai, was defined as a rural village, rural area, which is surprising that Vashi has been, I think, urbanized for the last 20 years. Okay. So some of those operational aspects of redefining, looking at the top 300 cities or towns in India and looking at the pricing is important. That's one. Two, on the other side, what is missing in the top 10 cities where the urbanization number has been on increase over the last 10 years is this. There is no social rental housing available. It has been on the decline since 1980s. What it means is that you come into a city for a job, and you're going to probably live there for 10, 15 years. Can you afford housing which is actually a rental housing? And that has been on the decline, and that's something. And when they say social, it's owned by trusts, it's owned by governments, and that has been on the decline. And until we fix that problem, we really won't know why are people buying houses. I mean, even today, the number, if you look at, let me give a number. Number of people who pay income tax, who declare income tax of over 1 crore plus is only about 80,000 people. And does it mean that only 80,000 people or 80,000 into, let's say, multiplier of 2 or 3 own houses which are more than 5 crores and above? Not really, right? I mean, there are tons of houses which are getting sold, at least in the top 6 cities which are $1 million plus. The numbers don't stack up. So the reality is in housing, we need more granular data. Even the National Housing Bank, the NHB, which is the sectoral regulator for housing finance, I mean, we need further granular data even for affordable housing. And I think that is missing even today.
All right. Affordable housing, social housing, a very interesting concept in the West, very common in the UK, in Europe, in the US. We haven't seen the concept of social housing a lot, at least I haven't, Mithali, come to think of it.
But I think Shweta, that's I think it's a little imprudent to discuss policies in the developed world with, what India wants to do. Even if you look at the healthcare system, in London, for example, you have the NHS. You're not really paying for healthcare. So I think our specific problem right now in India is the fact that even though the government has allocated some 80,000 crore rupees, has built 3 crore houses under the PM Awas Yojana, these are good big numbers. At the end of the day, you've got to ensure that there is diversification of employment across the country. As long as employment is concentrated in, let's say, the top 10, top 12, top 20 cities of India, property prices are going to skyrocket. There's going to be greater demand for housing, and that housing is going to throw property prices up.
So as long as Srinath raising his hand. Yes, Srinath.
I want to come in, Karthik, just giving an example of Mumbai. You would have the chawl system, which has been around for quite so many decades, and that's on the decline. I mean, these were chawls which was basically for the, let's say, the white-collar jobs and people who came into Mumbai city for search of a job. Yeah. And this was basically one room with probably a small kitchen and a shared toilet every floor. Social housing scheme which was built by large trusts, charitable trusts, or sometimes corporates owned it and gave it on lease. And the reality is you could get actually workers coming in. Today, what has happened in the name of urbanization, that number which was probably 60% of all housing stocks in Mumbai in the 1960s and the 70s, this was right after 10 years after Maharashtra became a separate state, has declined to as low as 28% of the total stock is just only social housing. What does it do? Is people who come into the city have to live in first search of a job. Today live about 2 hours away from Mumbai, which means quality of life suffers, everything suffers, and the entire city is becoming probably, instead of calling affordable housing, we talk about sobo-then. I think that is the same state of affairs for most of the top 10 cities in India. The lack of affordable rental housing, but for probably, let's say, a Bangalore, is actually causing people to have very low quality of life. So what's the point in working for 40 years? You're saving money, sending it back to family.
I can't believe you just extorted Bengaluru so easily from high rentals. I mean, come on, you have enough and more complaining about the high rentals in Bengaluru.
And honestly, the one city we should be excluding from high rentals is Kolkata. That's still a city where, which is my second hometown, and where you can still get, housing which is more affordable. Yeah. But, coming to your question, and also Karthik, just to react to a few things, I think what is important is not only looking at housing, but spatial development.
Yeah,
right?
So, absolutely.
Because when you think about it, let's say that, like Srinath is saying, Mumbai is here, I'm living here, what is the connectivity? It shouldn't just be that I'm reliant on one mode of connectivity. I need to have multiple modes. Suburban rail is one. But I also need to have high-speed rail, I need to have metros, I need to have bus systems, running between cities as well as within cities. And today the focus on public transport, if I look at the number of TV debates that are focusing on public transport, is very, very few. Because why are we not talking about safe cities, cities that are walkable? One of the things, like you said, let's not talk about developed countries, but we should talk about pavements that are walkable.
I think we should talk about developed countries.
We should talk about developed countries.
To disagree with you vehemently so, if you aspire to be a developed country, you've got to aspire to some of their systems which are better than India's.
Yeah.
Now, I'm not talking about the NHS.
I'm all for aspiration,
I'm not talking
Shweta.
about the NHS.
But it's not apple to apple. Right now in 2024,
absolutely,
the divide between, look at the economy, the size of the economy. The US economy, for example, is at 22 trillion. India's economy with I think 4 times, 5 times the
But
population
Karthik,
is
Karthik,
at 4 trillion.
even
Look
at
at the per
22
capita GDP when it gets divided to the number of people. You know, it's not going to be an apple to apple comparison for India.
You know,
Absolutely. But even at 22 trillion, the US has not managed to build good walkways. It's still a country
Because
reliant
the US,
on
Mithali,
cars.
has always focused on cars, has focused on
Exactly.
building infrastructure pre-World War II,
Which is-
excellent highways, freeways, speedways. Now, I'm saying, you know, every country has its own challenges. One of the challenges that India, and not just India, even the neighboring bloc, because of the region we happen to live in, is to do with the weather. I'm saying you make the best public infrastructure in a city like Delhi. You tell me, Shweta, how many times in a year will you actually be able to walk it?
Not
so
really.
is the case in Mumbai. In Mumbai, in fact, you know, the Bandra Sea Link area, you know, and going all the way almost till
understand that it's
halfway
not
to
very
Santa Cruz,
conducive.
you have walkways
No,
built.
no,
People
I-
sleep
See, it's not
in
very
those
conducive
walkways.
in some parts of this country, but in other parts of the country, a walkaway will be conducive. To my
Exactly.
point of affordable housing, you know, it's not so much about per capita income or what our, you know, spending capability is as an average Indian. It's about ensuring a roof over our head. And I believe it is government's mandate to do that.
So what should be the priority of the government, Shweta? Right now, should the priority of the government be to enable people to walk to work? Or should the priority of the government be to buy cars which are going to spur the economy and buy houses which are long-term investments and keep building walkable roads maybe for a future
Give
day?
people jobs and give them a roof over their head.
Absolutely. So that tells
So
it,
I
right?
think-
so
I-
I
it
think
can
the
be-
walkways can wait at least for another few budgets. I think
no.
we can get to that in due course.
We definitely need cities that work for people, and we need cities where people can
So
get to
my
their
understanding
jobs.
of urban infrastructure, Mithali, right now is we need city roads that don't clog. We
That
need
never
drainage
happens.
systems
So,
that work.
Karthik,
Okay,
let's
okay. This is a very interesting debate. As a debate that we're going to continue having post the budget speech as well,
Yes.
for sure, because of the allegations. But
it
you know,
starting?
we're sort of running out on time with Gaurang. Gaurang was taking time out to be with us. Gaurang, you know, look at the talk of, you know, what the budget needs to do, where the money needs to go, what infrastructure needs to be developed. You know, and between all of this, all I can think of is the real estate stocks, which are doing really well. You know, and look at the way the cost of affordable housing has been redefined right now, because I think for example, in Noida right now, affordable housing is 1.5 CR. You know, like that is like affordable housing at the state for the middle class, at least 1 CR. You know, what is affordable housing, Gaurang? And you know, tell us, you know, the way things are going, real estate stocks have nothing to worry about going forward, budget day or not.
Well, so month of June was a record-breaking month for the last decade, and it was the best month in terms of registration. And I think one of the panelists also mentioned about chawl system in Mumbai. So these were, I think, BDH chawl systems, which were primarily made for low working class people and for those workers who are associated with, at that point of time, the textile mills that Mumbai had. And that was a huge land parcel, and that's exactly what we are seeing nowadays with the names like Century Textiles and the Raymonds of the world. Large land parcels are now, you know, getting converted into huge lottery tickets in terms of redevelopment or development. The fact also is that Mumbai, some parts in Mumbai also have buildings which are ground plus 2, ground plus 3, which are possibly built in 1940s and the 1950s. And the condition of the state of those, you know, structures have become extremely weak. Hence, we've had, you know, redevelopment, cluster development, and society redevelopments. And the kind of amount of work that still needs to be done and the opportunity that is still there, I don't think there is going to be a pause for the real estate sector as far as Mumbai is concerned. We have also heard about certain projects getting launched where the ticket size was about 6 crores to 7 crores, and all those projects, all those units have got sold out within days. So the capacity or the appetite is there and the opportunity also there. I would say possibly look at strong names, you know, names like Godrej Properties, Oberoi Realty, names like Prestige Estate, Shobha Limited. I think these are some strong names with respect to balance sheet, where the debt light balance sheet and of course the execution capacity is very good, even if you compare it with the industry standards.
All right, conversation of course around affordable housing and how real estate stocks continue to perform come budget day or not. Gaurang, thank you very much for taking time out. Thank you for joining us this morning. We hope to have you back after that budget presentation. But staying on with some of those visuals, of course, coming in right now from the new Parliament building as well, where Prime Minister seemed to have entered, Finance Minister, of course, on her way for that crucial budget presentation. We have some political reactions and bites that have come in. Let's quickly listen into them.
बजट होने वाला है और जो माननीय प्रधानमंत्री जी के नेतृत्व में भारत का जो आर्थिक प्रगति हुआ है उस प्रगति और भी आगे बढ़ेगा। प्रधानमंत्री जी के मार्गदर्शन में माननीय निर्मला जी जो रख रहे बजट तो विश्व में आज भी अभी तेजी गति से जो बढ़ने वाले फास्टेस्ट ग्रोइंग इकोनॉमी जो है और हमारा ग्रोथ भी जो अच्छा है उसके लिए पूरक जो होगा वैसा ही बजट रहेगा और ये विश्व में जो हम तेजी से बढ़ रहे हैं आगे भी बढ़ेंगे।
बजट देश को विकास और प्रगति के पथ पर ले जाने के लिए एक संकलित सफर होगा। विकसित भारत का जो संकल्प प्रधानमंत्री जी का इस बजट के आधार पर उस लक्ष्य की पूर्ति की तरफ तेजी से हम बढ़ेंगे, यह सबकी हमारी आशा।
I would like to limit myself to only two issues. One is the exemption that is granted for insurance policy proceeds when a person invests for more than 5 lakh in a year. That was withdrawn sometime in 2022. But I would think that should be done away with. If it cannot be done away with, it should be increased. The limit should be increased because even a person who earns only say 1.5 lakhs a month or 2 lakhs a month, say maybe with 4, 5 years or 6 years of experience, the people are able to get that kind of a salary. But he may be investing in more than 5 lakhs in insurance. And if that's the case, and if he is not able to get the maturity proceeds tax free, then it's a very serious hit on individuals. That's one thing. Second is, I was doing some roundup of malls and things like that. There is no real sports goods manufacturers in India. And Paris Olympics is also coming in and we've been talking about it. But there is no incentive to push sports goods manufacturing in India. There should be something they have to do it. But apart from that, rest of the economy and all people can talk. And I'm not talking about the international trade today, thinking that maybe...
First of all, it is very encouraging to see a woman as a leader to present it for the 10th time. And that too is a record. First of all, my congratulations. And I think the finance minister has set a pace as a role model for many more women to take up such challenging positions. So I think India can now hold its position very high and tall, saying that women has been leading some of those tough matters from the front. And I think congratulations to all of us that we will still beat the odds and start progressing in the coming years. I think a lot has been discussed about what is to come, whether it's business, social sector, education sector, healthcare sector. I think the most important aspect today is about employment and employability and how multi-stakeholders are going to come together to create that.
All right, those are of course some of the reactions coming in. Just about 20 minutes to go before that crucial budget presentation. Finance Minister and all the key members are already in Parliament. Some of those visuals of course coming in live from Parliament, Krishna, where budget would be presented at about 11 o'clock. And because we are short on time, just about 20 minutes to go, let's also quickly take a look at some of the key priority areas, 9 areas to be precise, that News9 Live has identified that should be the focus of this government. To begin with, I think one of the key things that has propped up during our discussion has been our thrust on manufacturing. What can the government really do to prop up manufacturing besides PLI? There is demand, of course, to expand PLI, to rationalize PLI, to have more money apart from the the 1.97 lakh crore rupees
right.
to perhaps a top up on PLI. That, Karthik, is also on the agenda, could be taken up perhaps in the
and
budget.
it's a double advantage. You boost manufacturing, you boost GDP correspondingly. At the same time, you
And
do
the jobs.
and you create jobs.
And exports for that matter.
And
So, you know, I
exports,
think,
of course.
the multiplier effect of the thrust on manufacturing, I think, will always be understated. You've got to understand that at the end of the day, mass scale employment, which does not require skills which are not difficult to master, will happen only through a thrust on manufacturing. So, low-skilled jobs, mass job creation, and creating clusters of employment. And these clusters of employment, again, thanks to manufacturing, will not always necessarily come only in the key cities, which tend to add disproportionately high numbers to India's GDP growth. So, at one point, you're talking about manufacturing adding to overall GDP growth numbers. Manufacturing also has a dual advantage to adding to states' revenues as well. So, I think a thrust on manufacturing can never be overstated.
All right, as we speak, visuals, latest visuals, live visuals coming in of Prime Minister Narendra Modi. These are visuals from just a short while ago. Prime Minister Modi entering the new Parliament building for day 2 of the monsoon session of the Parliament. Day 1 began with the presentation of the National Economic Survey. Now we have a budget day and the Prime Minister is in the house.
All
Absolutely.
right. And the second key area, of course, that we are focusing on right now continues to be jobs. Now, jobs, something that will come on the back of manufacturing, but will also come on the back of services. There is an understanding, however, not, apart from the fact that we've been reeling under a job crisis, AI, blockchain, machine learning, those are some of the key critical areas, Mithali, that the workforce needs to be skilled on and upskilled on if we were to continue to have not just low-skilled jobs, mass jobs, but also jobs that really pay well. So white-collar jobs and jobs for people who are aspiring to earn more.
Absolutely, absolutely. Shweta, if you think about it, today what we have to think about is the dichotomy of the unemployment crisis. Where on one side you have millions of job seekers, as we saw, even during the heartbreaking visuals that were coming during the competitive exam protests and scams that were coming up, because there's a over glorification of white collar jobs, there's a over glorification of becoming an engineer, an over glorification of becoming a doctor. I'm not taking away from the amazing work that engineers and doctors are doing, but just that not everybody can become an engineer or doctor.
Right.
And at the same time, we have to think about how can we create education systems that respect and provide the right training for a blue-collar workforce as well. I mean, if you look at many countries around the world, not only developed countries like Germany, but also looking at South Korea, Japan, etc., we have skill training systems integrated in, higher education. And the national education policy has also called on skill training systems to evolve so that by the time a child is 16 or 17 years old, they can actually be encouraged to take up trade work, and trade work should be given the respect and higher income that it deserves. Everything cannot be just linked to a competitive exam. And at the end of the day, when we create these kind of skill training systems, that is when the employability of our graduates will also be better.
Absolutely. And self-employment, Lloyd, I think we discussed this just a couple of days ago about the number of startups which are registered in this country, over 1.5 lakh as of this year. The number has potential to go up massively, but would need some sort of incentives from the government.
Absolutely. But just a small reaction to a very valid point that Mithali made. I think clearly the whole Agniveer scheme, I know this is a political tinderbox, to some extent plays up to creating those blue-collared skilled workforce. Because these are people who are going to go 4 years, rigorous training, they're going to actually be out there in the field. I think a lot of these can actually unleash a lot of what is called an underserved part of the employment thing, right? With people who, everyone wants to become a graduate, right? And therefore you have, one police constable job and, 5,000 people lining up. I think the fact that we need the training force, I think that's a point very well made. And I do believe at some level, I hope the budget will address it. But to the point, Shweta, on startups, I think some of the momentum has gone, right? And some rightly so. I think a lot of it is part of bad governance, and at some point the euphoria was irrational. it was just throwing money at startups. It was like a lottery system.
Yeah.
So I'm glad some of that euphoria has gone. But having said which, I think we need to ensure that India still becomes a bulwark of the startup ecosystem, right? We're among the top 3 in the world. I think we need to continue, because that plays to an important point where we have to be a country of job creators, not all job seekers.
Absolutely.
Right? And each startup, a lot of them fail, will at some level be creating a lot of smaller level employment. So I do believe there has to be some incentives to keep this whole entrepreneurship culture going. And one part of it is for people to actually recognize that risk investing in early stage startups is a good thing. I know a lot of early stage investors in the last couple of years have happily gone back to the markets, right? The markets give you a relatively safer return. You don't burn your hands. And that is, to my mind, is a worry. If that little early stage investment culture diminishes, it is going to have a long-term impact on entrepreneurship.
Then there's a question of angel tax that keeps popping up every single time we discuss startups.
Srinath is also with
Yeah,
us.
Srinath, angel, not really, the angel tax is not exactly angelic when it comes to investing in startups, and especially at a time when funding is not what it is.
Angel tax.
I mean, probably you can't possibly call a tax as a demon tax. You have to call it angel tax, I guess. Nomenclature apart, talk to us. There needs to be something in it for startups in this upcoming budget that's set to be presented in about 15 minutes time from now.
See, I think the assumption is angel tax will go in some shape or form, but the reality, as I think Lloyd alluded to, is money, actually capital comes in if there are greater ideas which are scalable and which are going to get in revenues. So the point that I want to make is, out of 103 unicorns in India, if you actually look at the number of jobs created that by those unicorns versus, let's say, a mid-sized companies or a large SME companies who have actually created jobs, you'll be surprised that the unicorns have created lesser number of jobs. So you also need unicorns to come up. You also need the digital startups. But I want to just go back and say, for a minute, not every startup in India needs to be digital or tech-led. And that's a reality of India. So what Lloyd and Mitali have been speaking about, how do we create low-tech jobs or grassroots level jobs? And I think that's where the challenge is. And I want to go back to what Mitali spoke about, blue-collar jobs. For skilling, we already have NEP, which was rolled out 4 years ago. But the challenge that NEP faces is of execution. It's a great idea that those who are in the schooling, formal schooling system, CBSE, ICSE, or whatever, will pick up skills as they move along every class, and they can actually decide whether they want to pick up a certification in skilling, diploma or degree or post-degree, whatever they want. The challenge is today, NEP, most of the states, including the double-engine Sarkar states, have not rolled out NEP in the true form. So I think while we are expecting budget to roll out new policies and new budgetary allocations for newer schemes, I think we also have to do a reality check as what has worked and what has not worked. And do they need funding, continued funding at all? I mean, I think that's one I want to make a point about. Two, I think the larger narrative, which I'm speaking while we're speaking about manufacturing, is not every manufacturing sector is actually going to create jobs. We must have the context of Internet of Things and the fourth industrial revolution. Today, you can actually have a Maruti Suzuki or a Hyundai Motor entire plant, which probably makes about 5 lakh cars a year, run by just 10 people, if you actually allow for full automation. So that's also the political economy nature of policies, that we'll have to wonder what is going to happen to the state of skilling and manufacturing. Let's say you're today getting a great guy who can operate a paint booth in an automobile plant, and you skill him, and let's say we skill about 1,000 of them in every city. What happens if those factories move to automation, fully automated level? And I think that's something that the government cannot stop private capitalism. Since Karthik loves capitalism so much, it's a question for Karthik. So what happens if the investors decide, you know what, I'm going to fully automate my plant, and because I've already sunk in enough billions in India, and I need to churn out cars faster. How do we then support an employment?
No, you're right. I think, that's a very, very valid point that you're raising. And this is something which, in multiple countries, including Germany, for example, has been at the center of debate, that while you're talking about manufacturing in the age of technology is actually not adding as many jobs as it used to. So I think that's a very valid concern. But the point is, what do you do? Because at the end of the day, you've got to ensure that people make money. And for a country of our size, Lloyd, I think it is absolutely imperative that we find avenues where not just the highly educated services sector oriented jobs are created. but you've got to find other ways of creating jobs as well. So which are likely to be the labor intensive sectors where perhaps automation will not kick in immediately and we will still see some employment creation?
Yeah, so I think where we kind of lost out in our big focus and the whole PLI focus on high technology, I think some part is justified. So clearly when it comes to automobiles, when it comes to smartphones, India is a natural place because it's a huge domestic market. But I think when it comes to slightly lower tech manufacturing, which is very people centric, textiles, ready-mades, footwear, food processing, I think that's where we kind of completely seem to have turned our focus away. And to my mind, that is an area that possibly can get a fair degree of, should get some governmental support. The second area, Karthik, I think we need to look at is, like I said, the whole MSME, right? Somewhere in the last 4 or 5 years, the bottom has fallen out. And that's also critical because the one thing the government keeps announcing is some credit swaps. The reality is that for most financial sector, banking sector, MSME lending is high risk. Right? Therefore, they are the most expensive. You ask any banker, would you want to lend to an MSME? And I think that's the last sector because he recognizes they're very risk averse. And therefore, our MSME is getting funds at a very high rate, which makes it completely uncompetitive. I think that's the area that the government needs to step in some way to kind of help kickstart the whole employment at the grassroots.
Absolutely. So to kickstart employment, of course, multiple measures, policies that need to be put into place. But shifting back to the other key important areas or subject areas where I think government would need more focus. The other is, of course, electric mobility. There's been a lot of conversation around what electric mobility future will look like. Will it be in the frame of cheaper electric cars, or will it be buses? Will it be three-wheelers, which is where the electric mobility has seen the most uptick? Lloyd, coming to you on electric mobility, are we expecting an extension of FAME scheme? So perhaps FAME 3 will come into place. What are your expectations? Where are we headed as far as our electrification of mobility dream, 30% by 2030 is concerned?
I think we certainly will expect an extension of the scheme, but I think for now the focus has to shift a little bit into fleet, right? I think there's a lot of excitement generated around Tesla's potential arrival on private cars. I think the real impact will happen when fleets, when bus systems across the country start moving in, when a lot of, let's say, the private taxi systems start moving in. Right now, it's still kind of very cursory. My sense is that's the only way we will get to our climate targets of 2030. And that is certainly important.
All right. So will it be flex fuels? Will it be hybrid vehicles? Karthik, we've had a discussion before where Tesla didn't come. But there is an expectation that hybrid vehicles are going to be this flavor of the season with respect to the tax breaks that we've seen. As far as registration is concerned in the state of UP, perhaps that system could be emulated for the rest of the country. Do you see hybrid vehicles getting cheaper? Is that an expectation?
And also more importantly, the FAME scheme originally was supposed to cover both the electric vehicles and the hybrids. So far, hybrids have been kept out of FAME.
So, I think technically the policy does include hybrids as well, but, the growth momentum that we saw actually came by way of electric two-wheelers and three-wheelers and not as much by way of electric four-wheelers, and hence the hybrids pretty much, fell off the way they lost charge and were left behind. But, I think what the government must clarify this time around, and we've got to look at it in a global context. I think, if you remember the Republic National Conference at which Donald Trump was speaking, and he had said very, very clearly that the electric vehicle policy in the US is actually going to be thrown in the dustbin. The US, if Donald Trump, in the highly probable eventuality of winning the elections in the month of November, if electric vehicles are going to become unattractive in the US, is there any merit in India really pushing and manufacturing them? So that is my one concern area right now from a policy continuity point of view. But I think at the same time, it's important for the government to have one comprehensive policy which covers all sorts of alternate energy in mobility, as opposed to having one scheme for electric vehicles and hybrid. Somebody is saying something else at product launches. Nitin Gadkari, honestly, talking something else on flex fuels. We want to talk about CNG in the same breath with Bajaj Auto releasing a CNG bike, and we've got the scrappage policy and end-of-life vehicles varying from city to city and jurisdiction to jurisdiction. So I think broadly we need one nation, one auto policy. We need to be very, very clear because we are talking about very large scale investments. We can't be in a situation that you have a Tesla or not, you have a Leap motor or not, you have an MG, JSW or not. You have any domestic or international player making large scale investments, capital investments. They've got to have continuity in policy making. You cannot have a policy and take it off. You cannot say that you're going to go on one track and eventually decide to take another altogether. So we've got to have a clear-cut one nation, one auto policy for the long term, which is going to be unwavering and unflinching in its commitment to the investment that it wants to attract.
And if I could just add one point to what you said, I think it's the importance in this whole policy to look at charging infrastructure.
Absolutely.
I think the devil in the room, or the demon in the room in this context, is charging infrastructure, because all this talk, and suddenly you have large fleets wondering how do they manage charging infrastructure, and there's no clear policy. There's a lot of regulatory uncertainty around that.
Absolutely. I see Srinath raising his hand. Srinath, just to add to that, I think a conversation around electric mobility has also been whether to incentivize owning an electric vehicle or whether to make it lucrative to own an electric vehicle, not by the way of incentives, but by the way of infrastructure which is present. Srinath, there's a lot of conversation as to where the money should go at this point. If there is a FAME 3, should it be to make electric vehicle cheaper to own, or should it be to make it lucrative to own, because you have the right highways, you have the right charging infrastructure? Where should the money be, and what should the electric policy be about? Because Karthik says there's just too much confusion right now. There were changes in the EV policy largely to accommodate Tesla. Tesla never came. There were conversations around BYD trying to enter, not trying to enter. But where we stand today, I think there is need for some clarity on electric vehicle policy for India.
I mean, I agree with Karthik in parts. I think we'll have to put money on infrastructure first, and that's where Lloyd's point about the entire infrastructure ecosystem. I mean, it's easier to go out and buy an EV car, but if I'm going to drive long distances, where do I charge? I mean, that's one, and how do I maintain each of those vehicles? I think that's a larger point. But I want to go back, to Karthik's point about the US. Karthik, India, if you break the entire passenger car segment, probably they're about 5, starting from 3 lakh rupees, going all the way to 1 crore of rupees, the luxury segment. But whereas the US has about 22 subsegments of passenger cars, and the per capita ownership of cars is probably 18 times more than what Indian per capita consumption is of cars. So there's an economic story that's waiting to build out in the Indian space. That's a reality. 2, I think we've just started the story about connecting India in terms of connecting different point to point, district to district, state to state, where people can say, you know what, I live in Delhi and I want to go to Mumbai, and let me drive. It's only 12 hours drive away. And I think we will see that played out in the next few years. So it is very unfair to compare a developed economy and India today. But this is also the opportunity, right? As we develop each of those infrastructures, each of those highways across states and across cities, can we build those, let's say, non-fossil fuel infrastructure? I'm calling it non-fossil fuel because I really don't know how this entire policy is going to shape up. Will it be only EV? Will it be hybrid? And I think that is an opportunity that India has. We are building highways, thousands of kilometers every month. Can we build those infrastructure just like how the US developed its highways in the 1950s? Can we build motels? Can we build small townships in the entire ecosystem? I think that's an opportunity. But I also see that the states are not necessarily aligned with the center in that entire thing. And that is where I think the entire concept of cooperative federalism would come in. Can we bring some of these conversations to, let's say, the Finance Commission conversations of how do you split money and how do you develop an ecosystem?
We are counting down to the all-important budget speech. It's set to begin in less than 5 minutes from now. We've got just a few minutes left. And Lloyd, at this stage, it's a good time to bring up some of the idiosyncrasies of the budget speech, depending upon who is the finance minister. But one thing, be it P. Chidambaram as finance minister in one era or finance minister Nirmala Sitharaman in one era, they've always wanted to quote poetry from more than 2000 years ago. Tamil poetry. Specifically speaking, the great sacred Tamil text of Tirukkural, written by the famous Thiruvalluvar, from the 3rd, 4th century AD. P. Chidambaram has quoted Tirukkural in his budget speeches every single time he made a budget speech. Nirmala Sitharaman quoted in 2020, 2021. Nirmala Sitharaman went a step further in the 2019 budget and quoted Tamil Sangam literature, which is older than Tirukkural as well. So, interesting, isn't it? How finance ministers choose to express these numbers, the kind of thoughts, and where they take reference from.
I think that's brilliant, and I've read somewhere that Thiruvalluvar's quotes are the most popular across budget speeches in the last 3 decades, which is a good sign. But I think also the important point to note is there's an underlying current of Atmanirbharta. Remember that most corporates end up quoting Sun Tzu, and one has never heard Sun Tzu in Indian budgets, which I think is a good sign. And the second most popular thing to be quoted, I think, is Chanakya. He's been used a couple of times, but I really think, and my bet is that that the FM today will possibly lead yet again with a Thiruvalluvar quote.
Okay, from a Malayali to a Tamil person, let me just ask that question to Srinath Sridharan. Srinath, looking forward to some Thirukural quotes in this budget speech?
Absolutely. I mean, I think, see, if you look at all these scriptures and statements, it only shows the fundamental nature of budget has not changed over centuries. And I think the earliest actual formally documented budget was in the Arthashastra. It speaks about how division of revenues and distribution of revenues and tax collection and who was responsible for what, everything has been codified. So what we have done is modernize this presentation, and the Bhai Khata today goes iPad and digital. That's about.
Yeah, I mean, add to that, the whole, Atmanirbharta, we were not taking a suitcase in. Suitcase is such a, westernized, item. We are taking a Bahi Khata inside. Although it could be a e-Bahi Khata, it is still a Bahi Khata at the end of the day. And we are quoting our own texts from thousands of years ago to put it into perspective the financial decisions that we're making in this country, isn't it?
And not to forget the halwa that the finance minister offers.
The ceremony that
great symbolism, if you want.
National unity in halwa. There's one sweet dish that's made all the way from north to south to east to west. It is the halwa for sure. Different versions, definitely. So, very Indian budget these days.
The Punjabi in me is refusing to shut up. I've got to jump in.
Because before Finance Minister Nirmala Sitharaman, it was a Punjabi who was the Finance Minister of this country.
Well, that notwithstanding, I think the biggest, I'm the biggest supporter of the Punjabi Finance Minister by the name of Dr. Manmohan Singh. But that notwithstanding, I think what I, as a pure Punjabi, would want as a reaction to after the budget speech is presented is balle balle across all sectors.
All right, as we head to the election speech, which is likely to begin any time from now, let's quickly take a look once again at those 9 key areas, the focus areas that we were hoping government will focus on. I believe we are also getting feed from the Parliament right now.
That's right. The Speaker, Om Birla, has taken his seat. These are live visuals coming in, so which means we're just seconds away from the budget speech. Let's cut across live and listen in.
माननीय सदस्यगण, मुझे अपनी ओर से तथा सदन के माननीय सदस्यों की ओर से अंतर संसदीय संघ आईपीयू की प्रेसिडेंट और तंजानिया संयुक्त गणराज्य की नेशनल असेंबली के अध्यक्ष माननीय डॉक्टर तुलिया एक्सन का स्वागत करते हुए अत्यंत प्रसन्नता हो रही है। वे हमारी सम्मानित अतिथि के रूप में भारत की आधिकारिक यात्रा पर आई है। ये हमारे लिए खुशी की बात है कि डॉक्टर एक्सन बजट सत्र को देखने के लिए यहाँ उपस्थित है। माननीय डॉक्टर तुलिया एक्सन शुक्रवार दिनांक 19 जुलाई 2024 को भारत पहुंची। उन्होंने 21 जुलाई 2024 को आगरा का भ्रमण किया और इस समय वह विशेष बॉक्स में आसीन है। हम भारत में उनके सुखद और सफल प्रवास की कामना करते हैं। हम अंतर संसदीय संघ के प्रेसिडेंट के रूप में उनकी भूमिका के लिए सफलता की भी कामना करते हैं। उनके माध्यम से हम तंजानिया गणराज्य की संसद के सदस्यों, तंजानिया की सरकार तथा वहाँ की मित्र जनता को बधाई और शुभकामनाएं देते हैं। माननीय सदस्यगण, जैसा कि आपको समाचार भाग 2 के माध्यम से पहले ही सूचित किया जा चुका है कि माननीय वित्त मंत्री जी के बजट भाषण की प्रतियां हार्ड कॉपी के रूप में उपलब्ध कराई जाएगी। अतः बजट प्रस्तुत हो जाने के पश्चात माननीय सदस्य कृपया बजट भाषण की अपनी अपनी प्रति प्रकाशन काउंटर से प्राप्त कर लें। आपको ये भी सूचित किया जाता है कि माननीय मंत्री द्वारा बजट प्रस्तुत किए जाने के पश्चात बजट की प्रतियां आपको मेंबर्स पोर्टल के माध्यम से भी उपलब्ध करा दी जाएगी। माननीय वित्त मंत्री श्रीमती निर्मला सीतारमण।
Honorable Speaker, I present the budget for 24-25. Introduction. The people of India have reposed their faith in the government led by Honorable Prime Minister Shri Narendra Modi and re-elected it for a historic third term under his leadership. We are grateful for their support, faith, and trust in our policies. We are determined to ensure that all Indians, regardless of religion, caste, gender, and age, make substantial progress in realizing their life goals and aspirations. Global context. The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%. Steps are being taken to ensure supplies of perishable goods reach markets adequately. Interim budget. As mentioned in the interim budget, we need to focus on 4 major castes, namely the Garib, Mahilaye, Yuva, and Annadata, the poor, women, youth, and the farmer. For Annadata, we announced higher minimum support prices a month ago for all major crops, delivering on the promise of at least a 50% margin over costs. Pradhan Mantri Garib Kalyan Anna Yojana was extended for 5 years, benefiting more than 80 crore people. Administrative actions for approval and implementation of various schemes announced in the interim budget are well underway. The required allocations have been made. Budget theme. Turning attention to the full year and beyond in this budget, we particularly focus on employment, skilling, MSMEs, and the middle class. I am happy to announce the Prime Minister's package of 5 schemes and initiatives to facilitate employment, skilling, and other opportunities for 4.1 crore youth over a 5-year period, with a central outlay of 2 lakh crore rupees. I will speak about them shortly, while more details may be seen in the annexure. This year, I've made a provision of 1.48 lakh rupees, 1.48 lakh crore rupees for education, employment, and skilling. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, This budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Priority 1, productivity and resilience in agriculture. Transforming agricultural research. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. Missions for pulses and oil seeds. For achieving self-sufficiency in pulses and oil seeds, we will strengthen their production, storage, and marketing. As announced in the interim budget, a strategy is being put in place to achieve Atmanirbharta for oil seeds such as mustard, groundnut, sesame, soybean, and sunflower. Vegetable production and supply chains. Large-scale clusters for vegetable production will be developed closer to major consumption centers. We will promote farmer-producer organizations, cooperatives, and startups for vegetable supply chains, including for collection and storage and marketing. Digital public infrastructure for agriculture. Buoyed by the success of the pilot project, our government, in partnership with the states, will facilitate the implementation of the digital public infrastructure in agriculture for coverage of farmers and their lands in 3 years. During this year, digital crop survey for Kharif using the DPI will be taken up in 400 districts. The details of 6 crore farmers and their lands will be brought into the farmer and land registries. Further, the issuance of Jan Samarth based Kisan credit cards will be enabled in 5 states. shrimp production and export. Financial support for setting up a network of nucleus breeding centers for shrimp brood stocks will be provided. Financing for shrimp farming, processing and export will be facilitated through NABARD. National cooperation policy. Our government will bring out a national cooperation policy for systematic, orderly and all-round development of the cooperative sector, fast-tracking growth of rural economy and generation of employment opportunities on a large scale will be the policy goal. This year, I have made a provision of 1.52 lakh crore rupees for agriculture and allied sectors. Priority 2, employment and skilling. Employment-linked incentive. Our government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected